Welcome to the ACCA expert section on IFRS 15, revenue from contracts with customers. And today's section, I'd like to share with you my secret approach to deal with the balancing figure, which means the contract asset or the contract liability. We know that the contract asset is a bit different from receivable, because receivable simply means that we've got the invoice, we send it to customer, whether or not customer will pay really depends on the times that we wait for it. The contract asset very similar to receivable, but it's different. The amount of money we are about to receive from a customer would depend on the work that we've done. Contract liability, on the other hand, will be the money we received in advance. And the SBR topic, in terms of revenue applications, one of them will be the non-refundable deposit at the very first start, which is treat that as the contract liability. But don't worry, just to apply my top mnemonic called RC, we'll need to recognize revenue, that's what I mean by R, and compare to the amounts received or about to receive, which means receivable. So we'll need to use one minus another. If it's a positive figure, we put that into contract asset. If it's a negative figure, we put that into a contract liability. Now, as always, let's see the application to the SBR Pass exam. And this question is called Calibra Company. We are given 3 marks for this. Now let's see them. We're told that company builds apartment blocks. Taken 2 years to complete. This means that I would say that possibly significant financing components, we will need to think about that in this exam. Quite commonly being tested. Significant financing components simply means that we will be receiving money from a customer for more than 1 year. So we need to consider the present value of such when we compute revenue. We're told that the title and possession and control will pass the customer when this is completed. Okay. So it's like that when we complete the whole process, that will pass the control to the customer. It's very likely that the customer has to pay for this, yes? So that's why we may be recognizing revenue that's over time. The price payable on completion is 9.55. That's the option 1. All right. However, we're also told that customers can pay 8.5 on the day that the contract is signed. The chief account is calculated. That represents the borrowing rate of 6% for our company. So in other words, you can pay in 2 years, but if I were to discount the 9.55 over 2 years, which means that you can pay 8.5 now. Alright, so if that's the case then, as a starting point, I will say to the examining team member, I know the application. I put RC there. Now, if I were to, for example, receiving cash today, how much revenue that I need to recognize? Well, at time not, year not. We sign the contract with a customer, we receive 8.5 from them. However, we shouldn't recognize any revenue at all because we haven't performed the work. So therefore, that will be a negative figure of not 8.5 million. So that 8.5 million, I will say to the examining team that this will be the contract liability at the very first start. Alright. So, which means that you can say that we will need to credit the contract liability and to debit cash worth 8.5. And of course, for the contract liability, we'll also need to provide for the finance costs on a subsequent basis. So that's why we'll need to debit P&L for the finance costs and to increase up the contract liability. For example, at the end of year 1, the 8.5 times by 6%. And for the final year that we completed all the contract, we will then remove all the contract liability and to put them into revenue. And that's all we need to do. Of course, some students may say that, well, I don't want to talk about the second point. It's absolutely fine that you can say that that will be a significant financing component. And that's why you will need to discount it at 8.5 today as your theory mark. But it's entirely up to you. So these are the 3 points that I wish to write for this question. So always remember my mnemonic, RC, RC. All right. Now, after years of experience of lecturing the SBR subject and having the experience as the author for 4 accounting books and an exam marker in various professional accountancy bodies, I'm sure that my SBR course will help you pass this paper in very, very simple steps. And I look forward to seeing you soon in my course. Bye for now.
APC, accounting for your future.